Yeah, we just concluded this family office report, which we believe is the biggest family office report in the industry. We interviewed 340 family offices around the world, 2/3 of them outside of North America. And what we found, a number of interesting findings. One of them is that family offices are a lot more bullish than they've ever been before. Now, I think that's important because family offices are some of the most sophisticated investors in the world. You've probably seen Deloitte just published a report where they said in the next 6 years, family offices will manage more assets than the hedge fund industry. So there's definitely a lot of wealth there, a lot of assets there, and the ability to make important market investments. We're finding that going forward, 99% of family offices in the next 12 months expect positive or neutral returns. That's the highest number that we've seen in 6 years, and we've seen a shift out of cash in the last 12 months into private equity, public equity, and into bonds, which, given the news that you just discussed on the performance in equity markets, went extraordinarily well for most family offices in the last 12 months. So they're coming out of a strong period and they expect more strong returns going forward.
You know, Hannes, it's really interesting that you say that potentially the family offices are the new hedge funds. We've seen this explosion of family offices, specifically in Asia and Singapore and Hong Kong. Talk to us about the proliferation of family offices, how sophisticated they are, because we know that their time horizons also somewhat different to some of the other institutionals, for example. There's a lot of patient capital here. Does that also mean that maybe they're happier to take somewhat different, higher risk, let's say VC, for example?
Yeah, Catherine, I couldn't agree with you more. I think what we're seeing is that family offices take a true long-term view that reflects the opportunities that their families face. So first off, when we talk about family offices, we typically think of outfits that work with families that have 500 million in capital or more. That's like the typical family office that we deal with. What we're seeing is asset allocation-wise, an asset allocation that looks a lot more like a university endowment than a pension fund or insurance company.
So it's not your typical institutional investor per se. It's very much geared towards the long term.
Very much geared towards the long term and a multi-generational view. You can see this, that asset allocation to alternatives is typically anywhere between 40 and 50. KKR even said in a study of theirs 55%. So we're seeing a broad range, but a very significant allocation to less liquid investments. We are also seeing in our survey, when we asked what is the typical role you play, the number one role is investment manager, the second is risk manager, and the third one is manager of family unity and family wealth transition. So there's definitely a very long-term view at play here.